Here is our chart, guys, and we are going to be learning how to be profitable and how to do a risk management. When I'm saying a risk management, I'm not referring to only VIX 75. I'm referring to everything. I'm referring to everything which is in the reef, you understand? Because of we do have a calculator where I will be showing you how the calculator work and how to be profitable and be safe, you understand? So the first thing that I'm going to be telling you before we can start everything on the screen is that risk management is the first rule. Risk management is important more than your analysis. You can analyze the way you analyze, but if the risk management is going wrong, then you will never make money. Even if you don't know how to trade, but learn how to do a risk management. You understand? So that will help you to never lose the whole account. This is the Brave Wolf strategy for you. Here we go. First thing, we have the moves, or we have the shapes that we're going to see when we start into trading, or maybe when we start to open the chart. First time, or you're a beginner, I don't know. So you're going to see such movements. Let me start it from this side. You're going to see such movements. You understand? I don't know the name of this movement, but most of the time you will meet this movement. And I'm going to show you how do you deal with this movement when you are using my strategy. You understand? Even the risk management, I'm just going to give you here. So when you see something like this on the market and you don't know what to do, you're going to check where the direction, where it is going. You check the direction. As you can see on here, I drew the one that is a bearish. They call it a bearish, most of the people. You understand? They call it a bearish. This is how it will be moving. This is part of the consolidation. Because of other people, they don't understand, or when this kind of movement, it is like this, they say, no, maybe it's not a consolidation. It's a part of consolidation. Just that it doesn't consolidate that much. It doesn't have the power to consolidate because of it is forcing itself to sell. You understand what I'm talking about? So when you see something like this, it's a consolidation. Because of if you come here and you say you want to scalp, there is something that called scalping. There is a video on my YouTube channel. You can go and watch it. Here you can see it is a what you call it support, and then here it becomes a resistance. But it happened once because of it is going down, and then here support, here resistance. So as you can see, the movement is like this until to this point, maybe until where it's going to do a U-turn and go up. Is the same as the consolidation. Okay, because I want to be slow and I want you to understand very carefully. Understand? Because of like I see those other videos maybe that I recorded, maybe they are not good, I don't know, but this one I want to be slow and I want to be showing you everything. I want to put things straight. So when you see a movement like this, is a sell. When you go to the bigger time frame, you won't see it like this. You'll see it as candles. It will be candles like this. Some of the candles, they will be green. Some of the candles will be green. Maybe they will chill like this, and then it's green. And then some of the candles keep on being red. they keep on being red. I want you to understand properly. Maybe out of all the candles, you'll find that this one is green. And then all of the candles are red. You understand? So this means the market is going down more than the way it is going up. That's why you will be seeing a movement like this. Means the buyers, these buyers from here to here, it is not long, but from here to this point is long. You understand? So that's how you will see that the market is selling. Then here, when you switch the time frames, you will be seeing spikes. That's where I introduce spikes. You will be seeing spikes on the candles. You'll find that the candle has a spike. Then what does this mean? It means in the smaller time frame, the market is going up a little bit. You understand? From here to here, when you check on the maybe bigger time frame, which is 24 hours, means something like this, it is happening. You understand? The same structure, you're going to see it in here if you change the time frame to the lower one. You understand? That's how the market will be working. But those are the things that you have to just switch the time frames to see. And when you switch in the time frame, don't forget that, okay, in the bigger time frame, you saw a spike. And this spike doesn't mean the market will be buying. Again, when you go to the bigger time frame, to the smaller time frame, I mean, understand? When you go to the smaller time frame, you will be seeing a candle in the bigger time frame. When you go to the smaller time frame, you see the market that it is giving you a buy. But remember, that buy, it will start from here and end here. And then the market continue with a sell from here. As you can see, here, the market is going up, up and down, up and down, up and down. So when it is candles in the bigger time frame, it will be a spike showing that the market is doing a pullback. Then here we have people who come and say, no, let me trade this one because of I see it is a sell. Agree? On the bigger time frame, you will be seeing a sell. As I show you the candles here, you are seeing a sell going down. You do what? Without a risk management, without a knowledge that time frames, they work together with candles, with the structure of the market. Without that knowledge, you are going to just buy. Let's say this candle is not yet on here. It is about to show a spike. The spike is not there by that time. And then when now you see a red candle, you are saying, here I'm going to kill the market because of the market is selling. Obviously, many people, they will be saying, no, the market is selling because of, you see the red candles and you see the structure of the market is going down. You're saying, oh no, means I'm going to do what? I'm going to sell. Here where the problem comes. You take a sell from here. I'm going to show you. This is your sell position. When you sell, the market, let me say you sell here. You understand? By the time the market doesn't have a spike, you're going to sell here. You understand? You're saying, oh, it's a sell. And then in the smaller time frame, this is what is going to happen here. That's what I was showing you here. You'll find that the market wants to do a pullback and it is buying a little bit. And you'll find that, okay, from here to this before it can go down, it will cost you something like $20. With the lot size that you will be using, you are risking $20. Your risk is $20 for this length. When it's $20 because of it's a spike, the market goes up. This will be the price. This will be the price. Let me change even the color of the price. Here it will be the price, here it will be your entry. Understand? Let me show you price and entry. Price means where the market is running by that time. Understand? So here is an entry. And when we check in the smaller time frame, because of a lot of things, you can see them in the smaller time frame. Like you can see them clearly, not just clearly. You'll find that from here to here, when the market is making a spike, it's going to risk you maybe $20. And by that time you have $15 and you did a stop loss. Means you are going to lose your $15 before you can even hit the stop loss, because of the market started to go up from where you entered and make a spike. Started to go up and then release another candle. It released another candle. At the end of the day, you'll be saying, oh my guy, I did a sell, but the market did go my way, but I didn't make any profit. It's because of you didn't check all the time frames, how the time frames work. Understand? As you can see here, here's the price, here's the entry. The risk is $20. And you saw all the red candles coming in. You didn't thought about the spike. You understand? So the spike happened because of this candle is going to decrease. This one it's going to decrease, starting to have a spike. Then you become you become confused and say, oh, how did I lose my money? Because of the market even went my way. It was favoring me. But that's where the problem comes. When I'm teaching like this, I want to teach you what you have to do. You understand? So it's either this thing is going to go your way or not your way. What you have to do is to do a risk management. Let me show you. Now we're starting with the risk management, where the risk management starts exactly. If the market show you something like this, and you see, or okay, from there, the market, it has been doing whatever it was doing. You can see it shows you the structure, or it was going down. So why you are saying you are selling is because of you are saying the market will repeat itself. The market will repeat the same thing it did here, the same thing again for the second time, same thing for the third time, for the fourth time, even for the fifth time. You are expecting that the market will do the same. You understand? You are expecting that, okay, the market might do the same thing. What do you have to do? You wait for the confirmation to confirm if the market done with the buy. The market will be buying a little bit. Then after the market bought for a little bit, you wait for the market to start go down a little bit. Then from where the market started to sell is your stop loss. You are telling yourself, oh, okay, if this market goes down and then go up from this level, I don't wanna go with it. I don't think it is repeating whatever it was doing there. So I'm going to go out. It doesn't matter, maybe it goes up and down again. No, you don't have to risk that. You are just saying, I'm risking until just here. I'm risking until just here. Understand? So from now, you are going to say, okay, this is where the confirmation started. The market started to go down from here. And then now the price is here. You're going to go to the calculator, which is, the link will be on the description. This is where it is a what? It is a confirmation from here to where the price it is, from where the market started selling after a short buy until where the price it is a confirmation that, okay, now we are going to sell. Understand? We are going to sell. So you are going to use the calculator. Just that, I don't know if it's a network or it's my computer now. Here, when it is like this, that calculator, there is a video. I will put it here on the screen to see the video for the calculator on how to use this calculator. You are going to choose the lot size that you are going to use. The lot size, once you choose the lot size, is going to help you, and it's going to help you to calculate how much you are risking. Here you want to risk maybe $25. You have maybe $100. You want to risk only $25 in here. You are going to choose a lot size. The minimum lot size is 0.001. You understand? When it's 0.001, then you are risking only $20. And if that lot size, it will tell you that calculator, okay, this lot size that you want to use for this stop loss is going to fit for $25. And then now you are done with the confirmation. The TP, I will show you. You are done with the confirmation. Let me put this one as red. The link is on the bio if you want to talk to me on TikTok. So now you are saying, okay, I'm risking $25 with 0.001. Then about the TP, I have to cancel all this other side. Let me cancel this other one so that I can be able to show you, or how do you find the TP of the market. You have to watch this video slowly. You have to repeat it if you have enough data. Because of this market was doing what? Was going like this. Maybe let me make it longer. What's that thing I can hide the chart now? Let me do like this. I will check it. So maybe the market was moving just like this. And then here it was going up again. So in here, from where we are, like after you saying your risk is $25, and with the lot size, for example, it told you, or you can use 0.001. Here you are going to say it's my TP here. Why you are saying here is your TP? Because of when you check previously, the market was going where? Was going up, and then now it's down, and it was coming up there, and then hit this level and go up. So you are saying you predicted the market that it might not continue with a sell. It will start to buy from here. This is where you are going to take your profit. Maybe you can buy or do something. You understand? So we are going to another one. Again, now we were talking about the market that it was just falling. Then now we are going to talk about the consolidation. Again, there is another one, like it's the opposite. You're going to use it opposite here for a buy. Again, this one I was telling you about a sell. Even the buy, same thing. You check the confirmation, and then after checking the confirmation, you do what? You calculate your profit and your maybe your stop loss. You calculate how much you are willing to risk. You understand? So now we go for a consolidation. Consolidation be like this. When the market is like this, you will come with something. Most of the time I use something like this. I use something like this for indicating the support and the resistance. You understand? So in here, how do you treat this thing? Treat it like this. Let's say you want to buy. The confirmation will be from here. You understand? And then you'll find that the market started to go up a little bit until here. On here, it is the confirmation. It is the confirmation from here to here. We spoke about the time frames already. We spoke about the time frames. How do you see the time frames? This thing is happening. This consolidation can happen in each and every time frame. It doesn't mean the consolidation or the support and the resistance, you can only find it in the 5 minutes time frame only, or maybe 30 minutes time frame. All over, all the time frames, they have this kind of movement. You understand? So you must be aware. So now you see the confirmation. You say, okay, here's my stop loss. Here is my entry. Here it will be my TP. Why you are saying here's your TP? Here's your TP because of you think maybe the market might repeat the same movement, same behavior, and go down. That's what you'll be predicting. Here you're going to be taking a buy. After a buy, you're taking a sell from here. That's how we do what? We trade this volatility 75 for any of the markets. Okay, now it's time to go to the chart. Let's go to the chart now. As you can see, all the movements that I was, or maybe the structures that I was talking about, they are there here on the chart. I can see them. You understand? I can see them here. I can see, okay, the market started from here and it was trying to go up. Means the market, it has sellers more than the buyers. The buyers are short. That's where if I was trading it from here, I was going to do what? If I was trading it from here, I was going to say, no, I'm waiting for the confirmation. Once the market goes up, I wait for it to at least a bit go down. Understand? From here, it is my stop loss, and here it is my entry. The TP, I was going to put it here because of when I checked previously, the market did a buy on this side. So I will think, or maybe this is my prediction of saying, no, the market must start to go up from this level because of previously it went up. But unfortunately, you can see in here, it just started to go down. It kept on going down. So most of you guys, when you see the market maybe do something like this, you say, no, means I can't trade something like this. I said the market will go up from here, but it didn't go up, means I don't know how to trade. No, do the risk management only and leave the rest. let the market be crazy on its own, but when I let your risk management be tight, that's where you will win every day. You will make things happen every day. You understand? So here we can see, or okay, we did miss this one. Sell, I took a sell. I remember it was last year, December. I think I took it from here to somewhere here or somewhere here. Because of when it started to go up, I said, no, let me just leave it like this and close my trade. And then I closed my trade. Understand? So here is what is happening right now. It's consolidation. Agree? We saw the trend. But here, the market doesn't trend. It's consolidating, going up and down. You understand? So this is where the tricky part comes. Even it's not the tricky part, because of the tricky part it is here when the market is doing a continuation. You understand? So here it is where, yeah, it is a tricky part again, because of a lot of people, they don't understand what they can do here. So here market is preparing. It's either going to buy or sell. You understand? This is another tricky part where people, they say, no, it's tricky, we don't know what to do or anything. First rule, when you are getting confused, risk management, nothing else. Risk management, nothing else. We start by risk management because of, like you see, it is the bigger time frame, which is 24 hours. You can be able to do a risk management in the 24 hours because of, you just see the red candles and they show you spikes. It's 3 red candles, doesn't mean the market is selling. As you can see, we see this the spike here, means the market was literally buying on the other time frame. I don't know which time frame, but if we switch the time frame, we will find where the market is starting to buy a little bit. You understand? So we're going to do what? We're going to switch because of, we want to work in here. We no longer work on that trend. We work in here. You can see even in here is a big spike, but still we don't see it properly. We still have to switch the time frame. And then you can see here, we see a little buy that I was talking about. That when you see something like a spike in the bigger time frame, means the market is buying a little bit. And then as we can see here on this little one, we can see that the market is going down, but we can't take the risk in here. This is the bigger time frame. You can be able to do what? To do a risk management when you're using my strategy. You remember my strategy? You just check where the market started to sell, and then it's a confirmation that the market will be selling. You understand? So if you put it here, it might give you the big price to risk. You understand? If you put it here while you are in this time frame, it might give you the big price to risk. So you have to switch to at least 30 minutes going down. It's where you can do your risk management. It's not that big. You understand? It's not that big. And while you are even changing the time frame, you will see, all right, man, this thing, it has 2 candles, but this buy, it has 2 candles, but before it had 1 candle. What is happening is because of these candles, they are controlled by time. Means it's only 1 hour. The market took 1 hour going up because of its 2 candles in the 30 minutes time frame. Every candle is released after 30 minutes in this time frame. So it means the market took 1 hour going up. Each candle was operating for maybe 30 minutes, and then this other one is another 30 minutes that we are in. Means around 1 o'clock, or maybe it's what, I don't know, it's 12 or what, but I can see 12 on the clock here. So around 1 o'clock or maybe 00 midnight, we're going to have another candle. We don't know it's buy candle or it's a sell candle. all we do is the risk management. So if you do a risk management in here, you understand? I want you to understand properly. You are telling us, or if this market doesn't go down and start to go up like this, you are telling us, or your account that you are using, it can afford to hold, or you can afford to hold for the whole 1 hour without blowing it while the market is going against you, if you are in the 30 minutes time frame. You understand? So if maybe you put it here, means you will count this candle. You are estimating 1, 2, 3, 4, 5, 6. Means you are telling us, or you can hold for, estimation is 3 hours. If the market is going through the loss, and your account will survive. You understand? If you are trading it in 30 minutes time frame. I don't know if you understand properly now. You are telling yourself, or you can hold a loss for 3 hours if you put your stop loss here. Estimation, because of sometimes it can do a buy this time, do a sell, and then it do a buy. You see that, okay, it has 2 hours buying and then 1 hour selling. I don't know if you understand, but you'll understand when you watch this video. So you must repeat it. So here we're going to switch to 15 minutes time frame. I don't like 15 minutes time frame because of it's a little bit bigger. I think my account can qualify for doing that. Even for scalping. For scalping, you can tell yourself, okay, I'm going to buy here, sell here. Understand? The market will be doing like this. But what we want to know is where the market is going. It's going to sell. It's going to sell. The breakout. Even this one is, so it won't break out. When it comes to this point, it's going to buy. Once it reaches this level, it's going to buy. It is buying just like this. It will be moving like this. But you must be careful when you are scalping, because of you will find that the market is like this. Let me draw for you. You will find out where the market is like this. Agree, you are doing selling and buying, and then you buy here, you sell here, you buy here, you sell here, you buy here, you sell here, and then by the time you want to buy, you will find that is a break out. The market is keeping on going down. It broke out the consolidation that I was talking about. You must be careful of this. First rule, risk management for being safe on here, if it is not buying anymore. If it is stopping to consolidate and then it shows a direction, that's it. Same as here, because of we saw that the market is going to go down for a long period of time. For a long period of time, I'm going to 10 minutes time frame. 10 minutes time frame, I can see still the same as 15 minutes. I'm going to 5. This is where I mostly take the trade, or roughly take the trade. I'm going to say this market is going to sell. I will wait for this to go up, and when it starts to go down, that's where I'll get my confirmation. Understand? I will get my confirmation on the price. Once it's starting to go down, what if it doesn't go down? What if it doesn't go down? It doesn't matter. Means I didn't enter. It will play around until it comes down. doesn't matter that one. Understand? So this is the end of the video, and I hope everyone enjoyed. It took timing and it took 40 minutes. Within an hour it will be uploaded on my YouTube channel. So I was just here to record a video. I don't think about much of the things. Why I don't have energy is because of I wanted to